What's up? Good morning, guys. How we doing? Hope you're all having a good Thursday morning here so far. Market will open here in about a minute 45, so let's go over a couple of things. Business first, as is typical around here. Now, bottom of your screen, 22,000 still on the table. Tested it yesterday, and we rejected. You guys see, very, very small bear body was yesterday's bar on the daily chart. Again, bottom of your screen. And today, at least so far, we're kind of seeing a similar bar. Okay, so we'll see if 22 ends up on the table. Maybe we'll end up fading from here, but either way, range market, range market, range market. I am not going out of my way to bet on huge 250-point breakouts. Not at all. If I'm going to swing, more than likely it's going to be either a smaller swing on a successful breakout or a moderate, medium-sized swing near the top or bottom of the range. Obviously, to the top side of the range, I'd be shorting. You have more room in a range market that way. Bottom of the range, if I had confirmation, it'd be a medium-sized swing back upside. But again, not going out of my way to take huge bets on the outsides of the range, looking for continuation because we just haven't seen that succeed as of late. So probability is down of that succeeding based on market inertia. Markets have inertia. They're resistant to change. So we got to keep that in mind. All right, that's what we're looking at here today. We got PPI here this morning, just about an hour ago here now, and U.S. initial jobless. So that was the 730 bar, by the way, or the 730 move. And then we get Trump is signing some bills. I suppose they're calling it a bill signing ceremony at 10 o'clock Central, and then he's signing executive orders at 2:30 Central. So that is all the scheduled news for today, and just in time for the bell. There is the opening bell. Now, again, keeping our eye out for unscheduled news is always incredibly important. Using live stop orders and having live limit orders out for take profit orders. But I will be leaving them further away than usually I even intend, unless I'm managing a bigger swing or something. Okay, that's the game plan for today. Let's get into it. We'll let these institutional orders clear out, put our head down, and it might be another scalping day. We'll see. How you guys doing? Good morning, Chris. Gaines, what's up, brother? Get the next one. Grime, good morning. How we doing? Jimmy, Nia, Javaz, Marshall, what's up, guys? Good to see you all. All the regulars piling in. Good to see you guys. TC, what's up, John? Hindmost, good morning. How we doing? Clinton, good to see you. Tony, welcome back, brother. How you doing? Market trying to push, not able to reclaim that little pre-market wick, at least not yet. We'll see if we get a test up there. And there it is. There is that test. Again, 22,000 is a tier 1 level, so we're keeping an eye on that. It was on the table yesterday. It's been on the table the last couple of days. On the table again here today. The first couple of tests of a tier 1 level like that are going to be, in my head, the most important. The more tests you get throughout the day, typically the relevance begins to fade, especially when the tests are happening close together. If you get a test of 22,000 and then you pull back, let's say, and 4 or 5 hours later you get a test of it again, it's very relevant again because it's had a lot of time to have orders sitting up there, a lot of time for people to place, maybe limit sell orders just above 22,000, things like that. But if you get a test of it, pulls back, and 90 seconds later tests it again, obviously context is the name of the game here. Less crucial at that point. So all this going into the game plan here today. More than likely, just based on market inertia, it's going to end up being, again, a range day, okay? So I'm looking, kind of coming in with the expectation that it's not unlikely we'll have to just put our head down and scalp, kind of like yesterday. But we did fine yesterday. Finished out the day with just under 3,900 bucks yesterday. So I think I forget now, I think it was 2,200 on stream yesterday. Added a little bit of a cherry on top after, and that was it. So we'll see if we can kind of, I don't know, base hit here today. If we get a nice setup, I'm not against swinging hard, but the setup has to come. Manuel, good morning. C-Mac, what's up? Peter, Tone, how we doing, guys? All right, well, we're almost 4 minutes into the day here. And the market is struggling here. Struggling to make any kind of move. I mean, you look up top right, that's a 2-minute chart. Top left is the 5-minute, same that we were looking at before. And then top right, that 2-minute chart, it shows it. We're already starting to flatten out a little bit here. Let's see if we get kind of a, I don't know if I'd call it a second leg already. Just a couple of 2-minute bars apart, but let's see if that bear bar gives the bulls enough confidence to reload and push us up through the high. I know the bulls want to see 22 get tested harder during the New York session. But that doesn't mean that's going to happen here today. That's just what the bulls would prefer to see. Taz, good morning. Michael, how we doing? So, listen, it's been a little while here since I've done any kind of check-in with everybody. What are you guys trading now? It's been a couple of weeks since we've checked in. A lot of you guys, I know, had gone from evals to funded accounts. I know some of you guys always trade personal accounts. That's cool, too. Evals are, what are we trading today? Evals are funded. Curious. And I know some of you guys, if you care to share, obviously you do not have to. Some of you guys, since we last checked in, have probably taken your first payout. Terry, Take Profit Pro, John, 1 funded, and 1 fresh eval. Eval's trying to pass first one ever. Hey Gaines, is that still the same eval that you were talking about earlier, or did that one get blown and now this is a different one? Tactical, good morning. Faba, how we doing? Sovereignty Cells says, still trying to pass an eval after 2 years. Are you trading really big or are you trading really small? It's got to be one or the other, if that's the case. C-Mac, 50K funded, same account for 2 months, no payout yet. That's okay. 2 months isn't that big of a deal. Hovering around break even on the net P&L. Hey, listen, I've said this for years. If you are breaking even as a trader, genuinely, I think you're about 80% of the way there. Being able to break even technically means you are gross profitable. You're not necessarily net profitable, but you're gross profitable because you're covering the commissions to get you back to break even, right? If you were gross break even, you would be net in the red because of commissions. So if you are net break even, you're 80% of the way there. All right, market here is trying to press up into the highs. Again, 22,000 is potentially on the menu. A lot of people, by the way, you're gonna see a lot of people looking at 22 and they're like, man, I'm getting long because this market's testing 22. It's like, okay, based on what? Sure, maybe it does, but just to assume, hey, today is gonna be the day, that is a flat out guess with zero probability involved. Now, if you get some kind of confirmation and you look right ahead at 22 as a target, that's different. But looking purely at the number, I think is kind of silly. Yeah, listen, C-Mac, keep trading, refine everything. If you find, maybe you'll find a setup that you're taking that's holding you back, that's keeping you break even. And maybe you'll figure out one of your setups, maybe you should be taking slightly larger size. Maybe 50% larger size on it because it seems like your edge is larger on that. It's called dynamic risk. Then on some of your setups, maybe you start risking less because you believe, hey, there's still edge here. It's not as big as this other one. Just making that change, if you can properly recognize those things, would push you to net positive. That's okay, Gaines. So what? You took a haircut. Push on, get over the finish line. Patel, good morning. Good to see you. All right, we're 3 minutes out here from 8:45. A lot of the institutional orders by 10 minutes in have cleared. I would say most of them have cleared by 15 minutes in. But we are really struggling up here near the highs of day. Entire range on the day so far here is what, less than 70 points? Yeah, about 64 points. Chris, good morning. Good to see you. All right, now remember here, as far as scheduled news, most of it's out of the way here today. PPI and initial jobless hit at 7:30 Central. But we'll keep an eye out for headlines. We may get some headlines around 9 o'clock here. About 16 minutes out, so we'll see. And that would be from some Senate talk. All right, 20 seconds out, and that will set the 15-minute opening range. And I'll let you guys watch that pretty carefully. All right, opening range will be about 70 points. It's pretty tight, at least in the first 15 minutes. Could be worse. Yeah, if the Bears could give us a nice close, pretty much there. I don't want, well, sorry, near the low, like here. I really wouldn't want this to grow too much more. Again, mentality today, I'm going to put my head down and scalp, unless the market tells me, hey, it's time to trade a trend. But we haven't been seeing trends lately. So, in a range market like this, just get to work. Take as many good scalps as you can. But don't rush it. Bruce, good morning. All right, halfway through this bar here, 2.5 minutes left. You know, by the way, we are at least on the session. The Nasdaq is just barely red. The break-even point is pretty close, which is worth mentioning only because the break-even point on the Nasdaq has been an area of interest for the last couple of months, especially. We've seen it, you know, hang up just because of volatility. You know, for a lot of the last couple months has been relatively low. So the market's looking for really anything to get kind of hung up on. It doesn't have a lot of momentum to push through these things. At least not easily. So there's the break-even point on the day for the Nasdaq. Okay, 26 seconds left here on this 5-minute bar, and you can see the bulls are holding on, but man, they're struggling to grow these bars. Since here we're getting shrinking bull bodies, which makes sense because we're in a range market. Now, if we end up seeing a big pop through, it's going to complicate my life because I know we're in a range market, but I'm not into shorting just any high at all like this without confirmation in a range market, because it's always a question of, well, how high is it going to go? And to keep risk reasonable, at least for me, I prefer to wait for confirmation. Not only for the confirmation aspect of it in a situation like this, but also, and this means to the short side for me, right? But also, it helps me manage my risk. I have some way to do it that isn't entirely arbitrary. Whereas if I was just shorting the high of any bull bar, because I'm like, we're in a range market, this thing's going to fade. Do I set my stop 12 points away or 120 points away? You know, it's kind of tough. I mean, you could do it based on ATR, but I prefer to just wait for a small reversal candle near the top of a push in a range market like this. Again, in trend markets, I would do the opposite. Right, I'd be buying highs. I would have bought that last bar if we were in a trend market. The rollover, I should say, into the current bar from the last bar. But right now, stay dumb. Range, 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 range. That's what the market's telling us. When it does inevitably someday start to trend, hopefully someday here soon, you know, maybe we'll take a couple of range scalps and maybe lose a couple in a row and then, boom, make the adjustment because we really see it starting to hit. But for now, I gotta stay as simple as I can, stay as dumb as I can. Yeah, hindmost, you would think that markets just don't trend anymore. Looking at the daily, I mean, arguably, you know, a lot of people might look at the last couple of months in hindsight and be like, "That looks like a bull trend to me." I don't know, man. Since this region here, like mid-May, this market's been essentially sideways. I would not call that a trend. I mean, you look at each day, especially in this circle. A lot of range trading, especially for us as intraday traders. All right, 2 minutes, 50 seconds out from the rollover of this 5-minute. You know, we have a 2-minute up top here. This is a 2-minute chart. I mean, you can see we're clearly in a bull channel. It's not wide enough for me to care to trade that. I mean, realistically, we're looking at 23 points, top to bottom. Reasonably, you can kind of expect to maybe get half the channel So you're looking at maybe 10 points-ish of reward before you're back in the middle of the channel and probabilities start to shift back to 50-50, which we're not into, obviously. And then it's like, well, what do you risk? Because you could very easily see, if you wanted to go 1-to-1, you could easily see a 10-point push outside of the channel and still respect the range. So just waiting for confirmation and then looking to probably, I mean, ideally, if it were up to me, I'd see this baby close about here, and I'd short the rollover and just risk the bar. Which, to be fair, would be betting against that little bull channel. I'd be okay with that if we saw a clean close out of this bar in the next 65 seconds. Gains, what's your strategy when trading while big news comes out? Of course, I would trade small, but do you trade at all? No, I don't trade news headlines, at least scheduled. It's not like I'm taking a trade at 7:29 for CPI at 7:30. A lot of people try to trade news because the volatility is extremely attractive. I get it. For me, news is so heavily covered. It's so baked in that I believe news is truly about 50-50. Which means that getting an edge there is, I mean, good luck. You know, if you can find an edge on news, then you should trade it. But the only edge you could really get on news is essentially inside information, which obviously, you know, we're not going to do. So, just trying to trade price action with the news is 50-50. Really no edge. Once you factor in commissions, it's negative expected value. So I don't hit it. Well, here we are now, getting that push downside like we just talked about. That last bear bar, the close was a little bit ugly. I could have taken it, maybe. It wasn't very clean. Would have worked fine, but I had to skip it. So had this closed, like just for context, had this bar closed more like in here in this region, I would have sold that rollover and probably taken profits as we test the 20 EMA. Risk would have been the bar itself. But when you get that wick back upside, it adds buying pressure. Clearly, you're seeing the bulls step in. I mean, provably so, right? It's right there in the data. The risk now gets smaller, and the reward to risk gets bigger, but probability falls. It changes the equation. Very, very typical, by the way, of a range market. You get a big push, huge wick back upside out of the bulls. It's going to be a lot of just buying low and high selling going on today. You're probably going to see a lot of buying pressure below anything, a lot of selling pressure above anything. Doesn't necessarily mean that every breakout attempt is going to fail in 2 ticks. But it's a spectrum, right? It's always a balance of buyers and sellers. And in trend markets, like let's say in a big bull trend, it's been trending hard the last 5, 6, 7 days. You see people just buying above anything. Up dip, gets bought up instantly. New high, bought. Whereas a lot of people think in trend markets they should sell the highs. Well, everything's just getting bought. Everyone's looking for every excuse to buy. Breaking new high, buy. Breaks the wick high of the previous bar, buy. Breaks beneath, the wick low of the last curl, buy. In a market like this, it's kind of the opposite, which is why context is so important if you want to be consistently profitable, because you would do the opposite. A lot of people today, look at this. I mean, you see this bar, right? You break high of day, bears step in. If we were to break low of day, yeah, you might get some selling pressure, but bulls are going to step in, and you'd see that represent itself either in a bounce or in at least a wick. If you can, try not to rush. Try not to rush in the morning. I think that's really good insight. Because you know what happens in the morning? I don't say that just because, like, I mean, I hope you guys pick up. Like, I'm not the guy to be like, do this because that's, you know, you got to pay your dues. Do this because you have to earn your right to trade the afternoon. It's like, well, I mean, if you have edge, you should trade the afternoon. But think about it, right? The open is very volatile. It's also, you don't have a lot of information. So it's really volatile and you're trading on the least information you'll have all day. Because it's the open. Right after the bell, with each bar, you get more and more information. So if you rush in the morning, you know what can really happen is you probably have a little bit less edge than you do like an hour later. At least in a lot of cases, if volatility still has held up an hour later. You have less edge with more volatility. You know what that leads to? A lot of people, they'll dig themselves holes really early in the day when they're trading on very little or no edge and they don't even realize it in the morning on big volatility, which means the risk is highest. And this happens still sometimes when you have edge, obviously. You're going to dig a hole in the morning sometimes. But if you're trading with no edge, you're going to dig big holes in the morning a lot, very, very often. And then when the volatility dies, you know, you're going to have a really hard time digging out of that big hole. Even once you have a little more edge, like an hour, 90 minutes, even just 30 minutes later. And volatility is now lower. So you get frustrated because it's really hard to dig out of that hole. Don't rush the morning. Take it easy. I think a lot of people have the opposite kind of train of thought. They like to think they should take a lot of trades in the first 45 minutes because that's when volatility is highest. I prefer to be selective in the morning. If there's 3 trades in the first 30 minutes, I'll hit them. But if there's not, I'll hold off. And you know what? If there's from between 1 and 2 p.m. or whatever, if there's 6 trades, I'll hit them. Brandon, good morning. Dromisha, morning. Haven't been here for a couple of weeks. Yeah, we haven't seen you in a while. Here's an update. Currently up $715, starting out with 7K of ammo. Been scalping continuations over the last month. Consistency and self-control. Yeah, interesting. Tromisha, it's working, so I don't want to put anything in your head. I'm just curious for all of us here. Have you been trading continuations like you're getting long at the low sides of the range, or you're getting short at the high end of the range? Because lately in a range market, I can't imagine you're trading like straight up breakouts. They've been failing so consistently. But good work. 10% in a couple weeks, man. If you could do that consistently, that's a hell of a return. And you know what? Again, I would like to put this out there. If a setup presents itself in the morning, and you're like, okay, that setup's there, I got to put that on, but it requires, you know, pretty much the most risk I'm willing to put on for your plan, you still have to put it on. Don't be scared to dig the hole in the morning. I'm just saying, when you have no edge, you're inevitably going to dig more holes, more days in the morning. That's not fun, because when volatility dies, you find yourself trying to dig out of the hole, and if you're doing this 2 or 3 times a week, that's, at least consistently, that's a problem. All right, let's see what happens here on the test of the 20 EMA. Listen, I imagine, you look at the 2, it makes this really clear. It's a range market. A lot of overlapping bars, a lot of wicks. So you know that some bulls are going to try to step ahead of the 20 EMA. The question is, can they hold it up? Yeah, great, Tromisha. That makes sense. You're doing something that makes sense. Now, I'm sure you understand what I mean when I say that now. You know what I mean? We're in a range market. What makes sense? Buy low, sell high. Figure out a way to do that. What do I mean by that? Figure out a way to develop a plan and say, all right, I'm going to enter when I get confirmation near the low end of ranges, as long as the range is a range. That makes sense. Now, Tromisha, when the trend market hits, which it's going to here at some point, you got to be willing to set that aside and say, okay, that served me very, very well. I'll revisit this when the range market returns. Now it's time to trade like it's a trend market. Tromisha, a lot of people in your situation wouldn't understand that, and they would keep trying to trade the same way you've been trading when the trend market hits, and get burned. So, I'm sure you're way ahead of me. Lee, on a serious note, I've been recording my trades, watching back like a damn NFL player watching tape. You'll be shocked how beneficial. It's huge. Huge. It's not that big of a deal. Doesn't have to be 4K. Doesn't have to take up 1 million hard drives. Record your trades. It's easy. Press record, minimize the software, and just trade like you normally would. Put it in a folder, you're done. Yeah, Kings, honestly. Kings is asking, hey, like, how many contracts for a 50K? Oh, eval, you're asking. Well, what company is this? Is this Apex, or is this Take Profit? Yeah, with Take Profit Kings with the 50K accounts. I want to think. I'm running 150s right now. James, good morning. You know, Kings, you have to think, with the Take Profit, for me, the way that I trade the Take Profits is I try to hit 50% of the profit target in one day, and then I try to get 2 of those days, obviously, and then I just flip the rest of the days or whatever. Because you have to trade for a minimum of 5 days. Apex is a little bit more straightforward. With Take Profit, since you have to trade those days, you can take a couple of different approaches. You can try to hit 50% today and tomorrow. And then if you don't, you get, another day to do it, or the 4th day, because you have to trade those 5 days regardless. And then if you have days left over, you just can flip a micro those days if you need to. But as far as contract size, I mean, for a 50K with 2K drawdown, I think I would probably... Let me think. Yeah, if I were scalping, I'd probably trade 1 mini. If I was for the Take Profit eval, okay, I would size down once in the pro account. Just kind of take your time. If you were scalping, maybe, 15, 20 points. But in a more volatile market, probably 3 to 5 micros. All right, so there's a big push and a test. Now, again, I'm watching this expecting that we're going to see bears step in and try to slow this down. You already got the wick on that last bar. Very, very typical. I mean, range markets do this all the time. Now, we'll see if the bulls can actually break this out, but you can see very clearly there's going to be this psychological look of a little ascending resistance, so we'll see if that comes into play. I'm sure it will, at least to some degree. Yeah, Kings, but understand, I mean, I'm just talking evals, and I can only tell you my truth. The reality is, and here's just the truth, straight up, the opportunity cost is too much to spend too much mental capital in evals and tests. For me. Again, that's just my truth. But once you're in the pro accounts, I would not be trading minis, personally. But I don't trade small, necessarily. I don't trade huge. Like 2 trades and the thing's blown. But I trade a little bit more size in the evals and the tests, especially the Apex evals. Opportunity cost is important to recognize and think about. But that comes more and more into play when you're taking payouts. And there's a couple different approaches. I mean, listen, if you're somebody who is like brand new to trading, or you're like, I gotta take this slow, I don't have a lot of startup capital, and I don't think I have edge, you should probably just buy a cheap Apex eval and trade like 1 micro. Use it almost as a like a trading simulator with a little bit of money on the line, so that you take it seriously and you find your edge. But if you're somebody who's like, I think I have edge, and I've taken a payout or 2 or more than that, obviously. I mean, for me, the way that I look at it, it's like these evals, they're not expensive enough at that point for your business model to be spending all this time in them. So I size up, I take good trades. For Apex, for example, I'll take the most risk on trade number 1. And then if that happens to be a winner, it's like, okay, I can justify the larger time investment. Then I size down into the finish line. If that first trade happens to be a loser, well, you kind of know as soon as possible, and you can maybe move on or dig out of the hole or whatever. But I just prefer to take the most amount of risk on the first trade on Apex evals. They are so cheap compared to the business model. If you are taking payouts, that the opportunity cost does not. The time is too important to spend weeks once you're taking payouts. But if you're brand new and you don't have any edge, I don't think you should go buy 20 evals and just gamble them all. Especially if you don't have, capital to go again when you blow them. All right, pushing into 21.9. Again, 22's on the table potentially here today. If it ends up making a test, it is a tier 1 level. But right now we're in a little bull channel. So here's the test of that little ascending resistance. You know there's going to be some bears trying to step in here. Let's see if they kind of get squeezed. Or if they're able to knock this back down to the low end. Damn straight, Kings. B.I.G. Speaking of which, Apex is 80% off. You can pass in 1 day, be funded tomorrow, if you would like. You don't have to, but you can, when you use code BIG at Apex. Which is a good deal. And again, full transparency, Apex sometimes does go to 90% off, but it's rare. So I am more than happy personally, because I pay for all my Apex accounts. I'm more than happy personally buying them at 80. You can see here the bull's kind of having trouble ahead of 910. Again, ascending resistance level. It's a trading range. I'm not a big fan of shorting these, because if you do see a breakout attempt, even if it fails, it'll likely stop you out before it actually fails and reverses, just based on the momentum, taking out some stops. But if we can get a rollover and then a nice little small little bear bar, I would short the rollover of that bear bar if we got that. Ricardo, good morning. Now, some of you, again, might be wondering here, well, you know, Nico, that's continuation, man. Why wouldn't you take that? Range market, context. Most important thing in trading, understand the context, right? Probability of making some huge push from right here. Probability is low. Doesn't mean impossible, but it's low. Too low to give me any kind of significant edge buying this rollover, at least the way that this setup is occurring right now with this little ascending argument for resistance. And we'll see if the bears can, again, curl that. If we get a nice little bear bar like closing here, I'll short the rollover and risk that curl. Relatively small risk, pretty damn good reward to risk, and decent probability there, if we can get that. All right, but I will be back in 2 minutes. Don't go anywhere. All right, we are back. You guys see this on this 5 minute, right? You know, we just talked about this. Had I bought that rollover, we'd be dealing with a doji right now because top of the range, right? So we're not getting a a small bear bar here, which is what I need to enter. If we quickly got to shoot down to like 908 and closed, I would sell that roll over 100% and just risk the curl. 20 points or less, 18 points, but now I gotta wait for this bar. So same idea here on this bar. If we can get a small, relatively small bear bar closing near its low, that's 100% a scalp for me, and I'd put that on and risk whatever was necessary. So we'll see how this bar develops here. I mean, hopefully you guys see, like, at least for me, there's a lot of things to think about, right? Like for all of us. But when you're able to kind of put it all together and think it all through, which again, I think another reason is another argument for trading a bit of a slower chart, like the 5-minute chart. Once you're able to think it all through, the decision making is relatively easy. Like, I know what I have to do. I know what to risk. I know essentially where to hit out and take profit. And I understand, generally speaking, what the probability sort of is. You're never going to know for certain. But it makes your job easy. It makes it less stressful. And I mean, that's a good thing, right? If you're going to do this for a living, you don't want to come in every day and be all worked up about every decision you have to make. By the way, tomorrow we will be doing another account giveaway. So tomorrow, I will be giving away another 50K take profit. Same way we did yesterday. So make sure you're here tomorrow, if you can be. Good morning, John. How we doing? All right, 2 minutes and 17 seconds out from the close of this 5-minute bar. Again, nice clean bear bar, and I'll sell the rollover, risk the curl. Good morning, Exposed. How we doing? Maverick, welcome. Good to have you. 1 second, real quick. Exposed, my first PA today. Can't believe it, after 2 months building myself up. Good work. Good work. Did you pass today or did you pass yesterday and you're trading it today? 20 seconds out here, by the way, on this 5-minute bar. Let's see. Again, if it's a doji, a bull bar, a small bear bar, I can't take it. But if we had a bear bar closing near its low, I'd sell that rollover. Just price action, right? Easy decision making, relatively. Trading it today, cool, brother. It's exciting. Well, that Fear and Green Index. Again, not that we can do much with it, but it just hit 63 out of 100. Been pretty similar the longest time. That's pretty damn neutral, though. 63. All right, here we go. All right, 3 minutes, 10 seconds out from the close of this 5-minute bar. Yeah, it's tough to justify. You know, I'd love to maybe transition to the 2-minute, back to the 2-minute and do some trading on the 2. Like you guys have obviously seen us do quite a bit. But right now, I mean, in this market with the volatility being what it is, not incredible. The 2-minute is just pretty wicky. I mean, the 5-minute is arguably much cleaner anyway. So we'll stick here and see what we can grab. Yeah, for me here right now, any close basically below 907 within reason, without it growing too much, right? And I would short the rollover. Just risk the curl. Easy decision making. Come on, Bears, give me something to work with here. Well, back-to-back, essentially dojis. That's kind of an ugly look, isn't it? Same idea, by the way, for me here applies on this bar. Meaning a nice bear bar closing near its low outside of this now range. This little flat range that's forming the last 15 minutes. And I would short the rollover. But something to think about here is the wider this little range gets when I'm looking for that confirmation bar for me to sell the rollover on, the wider that gets, the lower I'm selling, the more points I have to risk and the less potential rewards. The probability does at least stay the same, if not go up, but the reward to risk starts to fall a little bit. I would say probability probably increases slightly and reward to risk falls by a decent amount. So all that considered, there is, in my estimation, still plenty of edge to be had, but it would be less than if we got it here. The bear bar closing like here, for example, on this bar. Again, you're never going to know exactly what the edge is. Like, okay, this trade has a 4.2% edge. You're never going to know that. It's a matter of trying to make the best decisions you can based on what you know your edge to be in the price action, okay? And then you can calculate the edge later. If you want to do it per setup, that's fine too, but you need a massive sample size for it to even mean anything. Look at this 2 minute. Very, very flat. Very flat. Really common, by the way, when you get big bull pushes like this. It's really common. You end up flattening out. And then obviously the question is eventually this flat range breaks and you either get a soft curl downside usually or you get a second leg. But that's a hard bet to take, which direction it's going to go. I prefer to take the direction once I get some kind of confirmation and it still makes sense to do so. In this case, this is a range, so I'd be less inclined to buy a break higher and more inclined to sell a break of this little flat lower because there's still room to the bottom of this range, right? All right, minute 35 out. Let's see if we can do something here. It's just kind of tough because I know that we're in a trading range here on the 2 minute. But it's so tight. ATR currently, by the way, is in the mid to high 20s. Yeah, it's at about 28. That's the average points lately of a 5 minute bar. Yeah, Michael, Bulls. Yeah, the Bulls are stepping in, buying every push down. The Bears are going to sell every attempt at a push up. These channels can be traded, but, you know, if we're just being straight up, at least for me, some of you guys might do really well, okay? But you have to understand, like, I've tried, like, everything at this point. Not everything, but I've tried damn near everything. I've made pretty much every mistake possible. I have found for me, this exact situation, selling high and try to buy low, you can make money, but it's a tough way to make a little bit of money. it's a hard way to make a small amount of money, because realistically, once you're in the middle of the channel, which I mean, you're looking at 10 points, back to the middle of the channel, essentially, probability just shifted back to 50-50. So it's tough, because once you get that breakout, you know, you can get this kind of thing that pushes 5+ points and then reverses. This here pushes, well, you can't see it right now, but that pushes 6 points and then pulls back. So it's like, you know, what do you make your risk? It's kind of arbitrary. There's not a great point to pick to put your risk as far as based on the price action. You're putting it in kind of an arbitrary spot. So, you know, it's tough. You can make money in these, but it's a tough way to make a small amount. I think most people, especially beginners, a lot of intermediates, would be far better off when the market's doing this. Again, this is a 2-minute chart, but you can also see it on the 5-minute. When the market's doing this, starting here is what I'm talking about, to the right. For most traders, I think the best decision, the most profitable decision, is to wait until it breaks, one way or the other. All right, well, there's a push outside a little bit. Yeah, you know, those little... So Nick's talking about this. They're tough. Again, you can make money. The only way that I can ever make something like this work and actually make money here is very simple: buy low, sell high. Sell high, buy back lower. But management is really important, which is why, again, this here, a lot of beginner traders look and they're like, okay, good. The market has calmed down. Now I can get in and trade with less risk. I think this is the hardest point of this entire chart so far to trade. So it's kind of backwards. It looks the easiest. I think it's the toughest because the reward to risk, it's really tough to structure something that makes sense. And when that breakout comes, you gotta be managing risk somewhere that is arbitrary, right? What's up, Go Trade? Good morning. Split the difference. Gets you pretty damn close to the 20 EMA on the 5. Don't overthink these trend lines. There's a million different ways to draw them. Just draw the middle of where you think everyone's going to draw it. So if we did see a controlled pullback back to there, which right now would be a little bit beneath 21.9, I would not be against getting long if we got a confirmation bar, but in the same way right now, if we get a small bear bar closing near its low, I'll sell the rollover, but it has to be small, otherwise it eats up too much of the range. Good Lord. Nick, what time of year typically brings your favorite price action? I think it's less about time of year. For me, the beginning of summer right now, things oftentimes slow. And some years are worse than others. This year has been pretty, I would say, kind of brutal as far as how slow it has been. And then typically that starts to kind of pick up again, but it's not every year that this occurs. Again, I mean, for me, it's some frustrating times of year can be, in my experience, this time of year, some years, around like Thanksgiving, when there's a lot of days off. Let me look. It lines up differently each year. Yeah, so this year, Thanksgiving, we have like a half day, at least for the New York session, on like that Thursday. And then typically the next Friday after that is like incredibly slow because everyone just takes it off usually. Those times are kind of frustrating if you do sit down to trade. I don't know if it's worth just taking those days off entirely, but you could and get away with it and be fine. Dominic, what's up, brother? How we doing? Good to see you. All right, we've got about 4 minutes out here from the close here of this 5-minute bar. Let's see if we can finally get something. It's been, what is that now, 8? A few of which were dojis, but 8 bull bars here now in a row? Good morning. Yeah, for sure. There's stuff on the channel, just for free. And there's more videos coming. As far as teaching, I prefer. I think for me, the best way to learn is to just watch someone do and then explain what and why and how they're doing it. So that's what I'll do. There'll be recap videos on days that are relatively interesting, no matter the result. Well, the more and more this develops here, the more I mean, I want to get long. The problem is you need a good way to do it. And right now the market is not strong enough. And this is always a spectrum of like, how aggressive are you willing to do the thing you want to do? And if I'm looking at this right now and it's like, well, ideally I'd like to get long, but really what I want is I'd like to see a controlled pullback and then a bull bar closing near its high. Confirmation bar, I'd buy the rollover and look to see a push up to the high end of the range and take profit off as we get nearer to there. This is it looks like a hard push when you look at this look like top left. But I mean, it's really kind of a softer push. You get a push, an immediate pullback, hard push, trading range, soft push. So am I really willing, am I like excited to buy the rollover of any bull bar closing near its high? No, it's not. We're not in a trend market. It looks like a zoomed in bull trend, but it's a soft bull trend. I mean, you look here, this bar closing inside of the previous bar's wick high. Yeah, BC, I mean, call it whatever you want, but it is what it is. We're all looking at the same thing. So contextually speaking, I'm really interested. Just need a better way to do what I want to do. All right, 3 minutes left here on this 5-minute bar. Well, you guys see ATR down here is falling. It's below 25 now. It's at about 24.6. Now again, right now I'm not interested really in any swing whatsoever. So any trade I take here is a scalp, which is the only reason that in a bull trend like this I'd be willing to take a short. Looking for maybe a test lower, take out a couple of stops here. Maybe not this low. 30 seconds out from the rollover of this 5 minute. I need to see this close in this region. A little bit lower. Yeah, go trade. This is the Nasdaq. So essentially the same thing. The charts are going to look extremely similar. Well, there's the rollover inside of the wick of the previous bar. Quite typical of a market like this. All right, 2 minutes, 20 seconds out. You know, in hindsight, it looks like, well, you should have just bought the open and held, right? But, I mean, you could say that about any day. I mean, the problem is I'm watching every bar. And when I go bar by bar, there's a problem with every single potential trade for me. Every single bar, there's been an issue so far today for me. Now, if this bar could close here in this general vicinity, that'd be the first bar of the day that I'm cool with, and I would short the rollover, look for a downside test of the bottom of this bigger range. I don't want this to grow too much though. 54 seconds out, and I need it to close below this wick. All right, 30 seconds, see what we get. Come on, Bears, give me something. Give me something. Close below my cursor. Close below 32. Oh, you son of a gun. Yeah, I mean, Clark, you'd think with CPI, PPI, initial job list, the Michigan number tomorrow, you know, you'd think it might light a fire here. You know, I always hate to say it because the Nasdaq represents such a huge part of the US, right? But, you know, as traders, sometimes we have to think, well, what would be best for us? When the market goes lower, volatility increases because of psychology, because of emotion, and that's what tends to occur. You see the VIX start to spike when the market's crashing, right? So I'll always say, if you're an active trader, which all of us here likely are, you know, sometimes you want the market, probably more often than not, you want the market moving downside. You get more volatility, more opportunity to make money intraday, and you get cheaper prices to drive the money you make intraday in for a long-term investment. You get to buy cheaper. Because unless you're betting against the US long-term, which I would imagine all of us agree is a stupid thing to do, you know, buy and hold, you wait decades. I think a lot of us are going to live longer than we expect regardless, because of the way that everything's moving. You want to get in as cheap as possible. And if you can make more money while the volatility's higher from a downside push, and then you can buy in cheaper, everything's better. So here we are now, getting a push up toward 22,000. Let's see if we can make a test. Again, we said it's on the table, and here we are getting close. 37 seconds out here. See if this bar just stalls out around 68. Yeah, pretty much. All right, so this next bar here, believe it or not, becomes pretty damn important to me. Now, worth noting here, with these big, like, surprise bars that, surprise volatility, it is really common that you get a second leg eventually, at least a little bit higher. I say at least a little bit. It could be a little, it could be a lot. But getting a second leg after something like this is really, really common. Okay, but that doesn't mean I'm just looking to buy immediately. I need something better. I'm actually more interested here if this bar closes as a bear bar. Getting short for a little scalp as long as the reward to risk makes sense, which means this bear bar would have to not retake the entire bar. Stay relatively small, short the rollover, risk the top of that bar, and see if I can match or get pretty close to matching my risk on the potential reward. 2 minutes, 50 seconds out here on the 5 minute. By the way, ATR right now is about 25. That's the average range of a 5 minute bar, which is not a lot. That's quite low. We're used to seeing 25 on the 2 minute chart. Costy, there's, well, hang on. One thing here. Here on this 5 minute, I mean, you look. You see this little high turns into kind of a flat? We've been pushing through and pulling back to that. Pushing through, and now we're pulling back to that again. There's a lot going on here. Costies, no. So futures are a beautifully designed trading product. There are no Greeks. Therefore, there's no theta decay. There's no IV crush in the way that options experience it. The beautiful thing about futures is a lot of people think they're really complicated because it's kind of a different world. And they're really not. Futures were designed to be actively traded and to be used for hedging, essentially. Relatively actively traded. Different time frames, obviously. Intraday, couple of weeks, couple of months, whatever. But this is, it's a basic market. It's very deep liquidity-wise, meaning it can handle a lot of size. Almost any size you want to throw it at the futures market, it'll swallow it up, which is obviously a good thing for growing long-term. The spreads are tight, meaning between the bid and the offer, it's tight, which is obviously great for trading actively. And it's just, hey, you want to buy or sell. No Greeks. You know, we had a day like this, maybe a couple of weeks ago, I think. It's one of those days that, in hindsight, it looks like it... Well, we're just, barely into the morning, I suppose, but... It looks like it would have been a really easy day to trade, but then you really look at it. And again, like I mentioned a little while ago, there's been something wrong with every bar here. At least for me. Every single one. I've gone over every single bar multiple times now, and there is not a single trade that has made sense for me to put on. At least not yet. We're gonna get some trades, but just kind of bizarre. All right, I may have found a way that I can make sense of here. There we go. I'm going to get long here on that push below the previous bar. And I'm going to set my stop. We're going to do this. And I'm going to expand things out. Okay, probability here is not all that high, but reward to risk is pretty damn good. So this is where... That's how I'll structure that. Again, reward to risk is pretty damn good. Better than 1-to-1, I would say. And probability is all right. So I'm cool with that. I'm comfortable with that trade. First trade for me all day that I've been able to make sense of. So we'll see if that can work or if the bears just end up pushing this down through everything. In which case, that'd probably actually be better because today so far has been a slow grind. What's up, Chris? Good morning. Good to see you. We have ABC reporting. It says Israel is considering military action versus Iran in coming days. Headline just came through. Yeah, so I mean, for me on this trade, my stop out point is where, for me, the whole idea has fallen apart, which is good. That's where you want your stop to essentially be. When it hits the point where it's like, all right, the idea no longer is valid. As soon as you can, as tight as you can, without it being, too tight where you're getting chopped up. A lot of people, it's cardinal sin. A lot of people do that as well. They'll risk 5 points. It's like, come on, man, on the Nasdaq, that's chop up. If you feel the need to risk 5 points, you're trading too big. That's the rule. feel the need to tighten your stop, you need to lower your size and give yourself more room to be correct. Yeah, these bears are really trying to turn this little bull channel just back into a big old trading range. We'll see if they can. Yeah, they're gonna. At least for me. All right, I'll stop myself out there. The idea is broken for me. All right, let's move on. Yeah, with some big bear bars, that look after that stop out, that starts to change. Now the question is, do we get a nice big wick back upside and then just bounce, in which case the bull channel stays put? Or do we turn this back into a big old, here, like, let's see, can you see it up top? Yeah, the 5-minute top left. I mean, essentially, since the opening bell, that whole thing could just turn back into a trading range. But with these bull wicks, I mean, this is really common. We'll keep our head down, keep working. All right, that 5-minute bar is going to close essentially at its midpoint, which, I mean, you can tell that the bulls are not really feeling this. They're saying, you know, hey, hold up, bull channel, right? The bears are like, I don't know about that anymore. So let's go ahead and clean up our chart. I think it's about time to do so. This down here is the low of day thus far, at least after the bell. Headline here from Trump. He said, I'm signing the bill on California auto regulation. Yeah, Dominic, you're going to be seeing both here. Whether these are shorts covering this little added buying pressure we're seeing on these wicks or bulls entering, it's going to be a mix of both, of course, as always. But right now especially because we're breaking out of that little trend line. For the first time of the day, we're busting beneath the 20 EMA on the 5, which is heavily watched. That little bull channel is really trying hard to stay put, but it's essentially being broken. Now, something else we got to consider here, by the way, is you look at off the open. We saw the open around here, right? Or at least the opening low. Okay, and you get a push up, what, 160 points? And then we pull back, yeah, exactly, about 80 points. What is that? Can anyone tell me what that is? Anyone have an idea? Why you might see a little extra buying pressure here? Someone's got to know. Someone's been listening, I know. Michael, 50% retracement. Damn straight. That's what it is. Now, is that some big magical thing that I'm going to say, trade the 50% retracement, make a living in 9 minutes a day? No, of course not. The 50% retracement is just something to be aware of. When you get a push one way or the other, think about this logically. All this is a market. No, it's not the fib. It's something real. You get a push. 160 points, right? What happens the entire push? Shorts are saying this is a range market. This is going too high. Average in, average in, average in. Now you have thousands, however many, of shorts that have an averaged in position and they're sitting short up here, biting their fingernails, praying to whoever. And when they get back to the 50% retracement, somewhere between 40 and 60% retracement, guess what? If you could see all the averages on one chart, you'd see a bunch of shorts with their average in this halfway mark because they've been averaging up since the open. What do? They've been biting their nails for an hour and a half. 2 hours almost. They cover at break even. Really common to see this. Now, it doesn't happen every time, but it almost usually you're going to see some pressure, whether it's able to sustain a bounce or not. You're going to see at least some hesitation at the 50%. Same thing to the downside with bounces, some hesitation at the 50%. All right, we got about 3 minutes, 55 seconds left here on this 5-minute bar. And I gotta tell you, if it closed clean, I'd be interested. But it would have to be a nice clean close. Meaning I would need to see the bull bar grow, ideally closing near its high, above this wick. Well, ideally above this wick. It wouldn't absolutely need to be. But if we don't get that, it's too weak for me to buy. So we're getting quite a few headlines from Trump, like right now. He's mostly going on about Powell. He's saying, I can't get Powell to lower rates. He says, I'm not going to fire Powell. Trump says, I like long-term cheap debt. Yeah, but I mean, remember the point of the Fed's interest is to make themselves look smart. When you're steering something as big as the US economy, how do you make yourself look smart? You go slow. You go slow, because overcorrecting makes you look really dumb. And can wreak havoc. So the Fed's not going to speed up just for the sake of getting cheaper money, even though we all kind of want it. Kings, I wouldn't say that I just don't, okay, the fib thing, to me, I would explain it this way. What is the argument as to why this is relevant enough? Is it psychology? Is it that humans in some deep-rooted psychological way think in terms of Fibonacci retracement levels? Is the argument that everyone has these lines drawn? Because that's false. That's not true at all. I've just never really understood the argument why people are so dead set on Fibonacci retracements. It just, to me, it's like this is not relevant enough. There's no self-fulfilling prophecy. And usually I think when people use Fibonacci levels, the reason for the curl is something else, because they'll have like 20 lines drawn on their charts, and then it bounces off one of them, and they're like, see? Fib levels. I think it's a waste of mental capital. But hey, if you make money on fib levels, do it. Yeah, Leon, I think a lot of retail traders on Reddit use fib levels. I don't think a lot of big money are using fibs. But prove me wrong. There's no magic indicator, really easy rule of thumb. There are only self-fulfilling prophecies and price action and news. But again, I'll be the first to say there's a lot of ways to do this. So if you make money just because I'm not into it doesn't mean you can't be. There's 1,000,001 ways to find an edge. Yeah, Jason, I'd have to disagree. That's painting with a really, really, really broad brush. And by the way, the indicators are not some special secret code. It's just measuring data and then displaying it. Like a 20 EMA. Whoever programmed it is irrelevant. It'll be the same as long as the programmer knows what they're doing. Okay, headline here from Trump. He said, I told Powell we don't need to keep interest rates this high. I may have to force something. Interesting. I don't know what... He said he's not going to fire Powell, so what would he force? Usually, historically, presidents don't like to step on the Fed's toes. That'd be really interesting if he decided to do that. Fave indicator? No, not really. Just price action. VWAP makes sense. It's real. A 20 EMA. I just put them on for context, though. I don't make trades based off of them solely. Okay, well, the market in typical fashion here has made a push, now lower, and now we're back into a trading range. So breakout potential here, especially right around that region there is 50-50. We have a little bit of an ascending support, tiny bit. I mean, if you look at the 2 minute, you can see it there. There's a flat top. So probability-wise, if I had to make my best estimate, I'd say probably about 52% bullish, 48% bearish. Essentially 50-50. So I gotta wait for a break. James, attempting to pass another eval today. I have one. I've been grinding up on one MNQ, one micro, but it's taken 25 trading days to work up to 900 bucks. Any tips on sizing up for evals? Yeah, James, for me, I've said it before, when you're at the point where you are taking some payouts in funded accounts, I prefer to trade evals the reverse. I take the most risk on trade number 1. I take a good trade. I size it appropriately. I don't just gamble with the max size. But I take the most trade on trade number 1, and then I size down into the finish line. It's the most time-efficient way in my head. Because it makes sense to continue to invest time into an eval that you have a higher probability now of passing. So I size up from the beginning, size down into the finish line. Now, again, I should mention on like 100K static accounts on Apex, I do the reverse. Because you have to trade small to start because it's static. It starts out, your drawdown's the smallest at the beginning. What's up, Superfly? You know the drill. 5 minutes in the corner. Okay, well, ATR has crept up a little bit. It was at 24. It's back to 28. Man, this has just been a low volatility week in general. Couple of weeks. Well, let's see how this bar closes here. We'll place that for about 30 seconds, maybe 45 seconds. Because if we can crack not only this high, but also this previous high, which was the final bear bar in this sequence, then I would want to get long. I'd probably keep risk. I don't think I'd risk this entire curl. Nah, no, I don't want to risk that much. More of a scout mentality, I'd probably risk this curl here. If we were to get a fill. Again, that's a stop limit buy order. But you gotta be careful, because this is not necessarily a stop entry market. But in this case, I'd be cool with it. Only if we got that push. Which I will pull, 45 seconds. All right, back in a couple minutes. Don't go anywhere. All right, we are back. And I'm still waiting for something here, something good. These little flat trading ranges have just plagued the morning here so far. A lot of flat. Quick pushes, flat. Quick push, flat. And the problem is the quick pushes are tough to trade themselves because you end up with a scenario where you're very, very quickly, by the time you get confirmation, you're pressing the outside of the currently existing range. So you can't really take continuation. It's tough to justify, buying kind of a sloppy range, but it's there. And then you end up with this flat. So kind of tough, honestly, so far. A lot of holding off that we're doing. But as soon as something presents itself, I'm going to hit it. Where's ATR at? Probably about 20, yeah, 26. We're seeing about 26 points of range on these 5-minute bars on average. That's based on the last 10, by the way. Yeah, Dominic's saying if we get through the 33 point, we're good for a push. Yeah, Dominic, my only hesitation there is all that is a slightly higher push out of this now flat top. I see what you're saying, but me, I gotta kind of hold off in a range market like this and betting on breakouts. But if we got a close in the mid-30s, a close of a bull body, like here in the next 30 seconds, essentially, in the mid-30s, like up here, then I think I would buy the rollover and just risk this curl. Just thinking out loud. Well, I don't know if you guys remember yesterday, but yesterday, man, the morning was kind of like this. We were able to grab a scalp yesterday in the morning, but the afternoon, volatility actually picked up quite a bit. The ATR was higher in the afternoon than it was like this time of day yesterday. So, you know, hopefully we see that happen again today. I mean, I don't know. But this volatility, I mean, that has been, I feel like, a broken record. It's been the biggest drawback of the current market. We've been able to do pretty well. We've done all right. Haven't really been blowing out records or anything lately, but we've done well. Been able to have base hits. It's been a little bit volatile in terms of you know, the setups we're taking, the chart we're trading. We've had to make some adjustments along the way, but we've done well regardless. It's just when volatility picks back up, it'll be really, really nice. I think learning in a market like this is about the best time you could possibly be trading to learn patience. So I wouldn't, you know, especially if you're newer, I get it. It's brutal. It's boring sitting here watching this as the market goes sideways and doesn't give you many setups for, you know, half an hour. But sit here and watch. It's a good time investment. It's better to sit here and watch these bars, in my opinion, than it is to sit and watch a more normal market or an extremely volatile market, because you're learning the most valuable skill here, which is patience. But you also have to have the guts to hit it when the market is giving you setups, even if it means taking, you know, 5 in a single hour, for example. All right, guys, I'm gonna hit lunch. Come back in the afternoon. Maybe I'll, you know, again, if volatility picks up, I'll trade and see what we can get in the afternoon. But for now, I'm going to let this thing work itself out. Quick lunch, and I'll come back, sit back down, and see what we can grab. Apex right now, by the way, if you need some accounts, Apex is a good deal right now. It's 80% off, and you can pass it in one day, both if you use code BIG, B-I-G. Take Profit Trader, if you're more into the daily payout side of things, is 30% off. Use the code, or you have to pay an activation fee. If you use the code, they waive the activation fee, which is over $100. So get rid of that. Use code BIG. All right, guys. Have a great day. Be patient. Let it come to you. And when it does, hit it. Okay? Can't be scared when the setup presents itself. All right, guys. See you tomorrow morning. Pharaoh Friday. We'll finish out the week strong.